It was a weak handover from the Wall Street. Of course, we've seen Dow falling for the third straight day, but that is not such a big impact that we are seeing on the Asian markets.
So the official announcement is out. In the Nifty, you'll have Shriram Finance that comes in, and UPL will be making its way.
Reliance, with Viacom 18, will own the controlling stake in the JV, with Disney owning around 36%.
Yesterday, we basically had a situation where, especially in the second half, the market fell off very sharply.
5 additions have been announced in the MSCI India Standard Index.
Well, market open on your screen, we are at 21,930 is where we are at.
Our wind energy will double in the next 4 years.
And in the overall scheme of things, mobile undoubtedly is our largest trigger of growth.
Our poll says that we are going to see a 6.7% growth, which is fairly strong, but short of the 7% mark.
I'm given to understand that there are 4 broad categories that will be addressed, and this is going to be uniform across asset managers.
The general sort of impression that we got from the fintech companies who attended that meeting was that they would like to understand the regulations better.
Some recovery which is underway, so we'll discuss that.
Well, that's the day so far, and it's been a very, very quiet day. It continues to be a very quiet day as we get into the last hour of trade. We're coming to you from the CNBC-TV18 Motilal Oswal studios, and this is Closing Bell. I'm Prashant. With me, my colleagues Nigel and Sonia. Sonia, good to have you here. Nigel, afternoon.
Hey, afternoon, guys.
It feels like bazaar all over again. But actually, if you didn't miss out in the morning, you didn't miss out on anything, right? Because here we are again, and the market is exactly where it was in the early morning.
As flat as can be, but last 60 minutes of this series, let's see if there's going to be a battle between the bulls and the bears. But stocks are moving around. You can see Z that's come off the low point of the day, a couple of large trades earlier in the day. So that stock has popped up. HDFC AMC is looking a little bit nervous. That's at the low point of the day. So it's pretty much a stock-specific market. I think we play out the next 60 minutes, and then you get a fresh trend from tomorrow onwards.
I mean, hospitals, right? Big cuts across hospital names, and that actually is what we'll focus on a fair bit over the next 60 minutes or so. I mean, look at something like a Max Healthcare, 7-8% lower. A large name like Apollo Hospitals has been selling off last 2-3 days. Fortis, of course, is seeing a lesser damage, really, at this point in time. But just a few points. So the Nifty, basically, it's a repeat of, as Sonia said, in a way, bazaar, because we have not moved very much away from the 20-day moving average. We're 5 points away. As of yesterday's close, the 20-day was 21,945, and we're at 21,940. So nothing. It's been there. Next, supports. I mean, if there is another wave of selling which comes, supports come in around 21,700, which is the 40-day. Financials doing a little better. The last I checked, Nifty Bank was up about 1/3%. And mid caps and small caps, they are underperforming the large cap indices a little bit. 1/3%, under 0.5%. Nothing major. Market breadth also is in favor of declines, but the difference is only some 200 stocks between what is up and what is down. Sonia.
Oh, absolutely. And the space that I'm looking at this afternoon is autos, because tomorrow you have the auto sales numbers for the month of February that will come through. And in that context, the passenger vehicle space is expected to do very well. Double-digit growth for a lot of these companies like M&M, for example. And that's the reason why M&M is the big gainer in trade this afternoon, up 2.5%. Similar is the case for Maruti Suzuki. So if you notice, it's the passenger vehicle numbers, the stocks that are doing well. And on the downside, it is some of the two-wheelers that are struggling a tad bit, Bajaj Auto, Eicher Motors, etc. So that just goes to show what the trend may look like in terms of auto sales. But other than that, it's very, very quiet. The only problem really, as we were discussing in early morning trade, was the mid-cap end of trade, right? There it looks a bit sticky. Small caps are under a bit of pressure. So that's something that is tricky for the market.
Well, that's right, Sonia. And though the mid-cap and the small-cap indices are still under pressure, I just want to pull up the advanced decline ratio. At one point of time, we had less than 500 stocks actually that were advancing. That number at least has creeped up to around 1,000 stocks. So let's pull that one up for you on the screen. Yes, those lines have got a little bit closer to each other. So in that context, I think the bulls are trying to make a bit of a fight back and maybe buying select stocks as well.
Oh, absolutely. There's enough. It's a vibrant market. There's no doubt about it. So indices are not going anywhere. But, well, how should you position yourself in the last hour of trade? That's the question. Mitesh is here to answer that. Mitesh, not missed much if, at least the index level, if you looked at the screen in the morning and then just took off and came back now. What's the trade?
Afternoon, Prashant. So I think, I maintained a slight negative bias since that decline happened yesterday. And while, today we are very flat and the Bank Nifty is marginally positive, I think what has happened is that the structure has turned slightly negative. The indicators are now slightly pointing on the downside. So we are at the risk of eventually breaking down, though after that big decline, there could be some retracement happening. So I think that kind of pullback movement is going on. So I think till the Bank Nifty starts getting past 46,350, 400, will maintain a negative bias. Though we are not shorting in the future segment, we are trying to buy or take some negative positions by buying into put options. And on the Nifty, I think 21,900, once it breaks, I think, we'll see possibly 21,660, 700 zones to be tested on the downside. So mild negative bias. On the stock side, I have a sell on HDFC AMC. That's a stock which has had a very, very good run up. So I think, now is showing first signs of that profit booking led correction. So sell here with a stop above 37.60 for targets of 36.45, 36.40. And on the buying side is ICICI Pru, some kind of reversal over here. So keep a stop below levels of 524, look for targets of 545.
All right, Mitesh, thanks a lot for that. Well, Dilip Bhatt joins in now to give us his view on individual stocks. Dilip, hi, afternoon. Good speaking to you after a while. We were just talking about the auto names and how some of these passenger vehicle names are at the day's highs. This sector has started some sort of, a secular uptrend. But do you think we are at a mature stage of this upcycle, or could there be more to go? And what are the stocks you're looking at?
Good afternoon, Sonia. I think we have seen a very marked distinction in the passenger vehicle sales. The upmarket cars have been selling much more than the lower end. And I think that trend itself may be good for the auto industry as such, because selling premium cars would definitely mean a little more EBITDA per car, as what we like to see. But having said that, I think in an overall scenario, I would still be a little more cautious, because the car sales are moving up, but there's something else which is pulling you down. Maybe the tractor sales are not doing all that well. And even if you look at the valuations of Maruti or even Mahindra's, which is showing a good movement, but I think they also look pretty expensive. They don't look very cheap. Of course, long term is a different story that we all talk about. Long term, it may look good on a gradual basis. But I would like to be a little more circumspect about what's happening in this particular sector and wait and watch. Because especially some of the PV stocks and a little more so Tata Motors have moved up quite a bit. I think same is what we find even in two-wheelers at the moment, that the lower end of the two-wheeler still struggling to get its foot around, whereas a slightly premium one is doing much better, whether it's Bajaj Auto, whether it's Hero.
Got that. Dilip, good afternoon. Just coming to you, but let's just address the big story, right? Which is, of course, what's happening with the hospitals space. Now, Supreme Court warning to the central government over non-implementation of standard rates for healthcare procedures has spooked the street. It spooked healthcare investors. Ekta is here with the details, the news, of course, and what's being made of it. Ekta, take it away.
Thanks for that. Well, the big piece of news which has disconcerted investors in the past 2 days is that the Supreme Court has directed the central government to set standard procedure rates. Now, they have ensured there should be a notification of standard rate for healthcare procedures within a month. Failing to do so, the Supreme Court will consider implementing standardized rates as prescribed by the Central Government Health Services, or the CGHS. Now, remember that cash-paying patients basically pay substantially more than CGHS patients. Cash-paying patients are around 40 to 50% of private hospitals in India. And private hospitals are free to set procedure rates for cash-paying patients. So basically, there's no cap right now. Macquarie says that the CGHS rates are generally 40 to 50% lower than cash-paying patients. Viren Shetty of Narayana Health, who was talking to us earlier, said that it can range in terms of a difference anywhere between 20 to 60%. So that's the kind of rate difference that we're talking about. Now, what happens in the next 1 month, one will have to see. But Macquarie says that if in case there is a worst case scenario and there is a CGHS rate which is set for all procedures across private hospitals, then private hospitals' profits will drop significantly. significantly. Now, Viren Shetty was extremely vocal on this and said that it would be an Armageddon for private healthcare. There has to be a middle ground, and the middle ground is probably having price transparency, creating a study list of procedures. Rules do exist according to him, but they need to be enforced. Now, Macquarie says that they will be monitoring the government response in the next couple of days. Standardizing procedure rates is a mammoth task according to them. But the CGHS rates could probably act as a good reference point. According to them, both Apollo and Max have also in the recent past seen volume growth softening. So maybe those would be stocks to consider at this point in time in the context of this news. And other multi-speciality hospital stocks, which I spoke to a lot of analysts about, should be on your radar, especially those which have higher average revenue per occupied bed, which can go up to around 70,000 odd rupees as well. Now, Bino Pathirampul of Elara Security says that all the listed private hospitals are likely to be impacted in case there is any kind of change in rates. The analyst feedback that I picked up is that those with lower RPOPs, which are mainly regional plays, anywhere between 25 to 30,000 odd rupees, could be less likely impacted in case there's any kind of move in terms of standardization of rates. And hospitals with lower cash paying patients, around 30%, 25%, would probably see lesser impact. Next couple of days will be important to watch in terms of a government response to this. But yes, as of now, it's definitely shaking sentiment.
So for those who don't know, CGHS basically is basically medical insurance provided by the government, by the central government, for its employees. I mean, while you're in service and after service, CGHS essentially is something that government employees use to avail of medical services. And of course, over the years, what has happened is CGHS services are now available. I mean, it was the list of hospitals where you could actually go and get a procedure done and let the CGHS sort of payment scheme kick in used to be limited, but now it actually is pretty wide. And most private hospitals, I mean, you could go anywhere, any of the private hospitals and do this. Ekta, so basically, just to clarify, okay, I think Ekta is not there anymore, but I think what Ekta is essentially saying that the reference rate has to be CGHS. And of course, I mean, the rate, there's a big difference in terms of what CGHS sort of notifies as what it would pay for a certain procedure and what the private hospital, if you walk in with a medical insurance or otherwise, I mean, if you don't have, I mean, if you're a cash patient, you'd end up paying. So this is pretty significant out there. But let's actually play out that soundbite from Narayana Health. This is Viren Shetty, Executive Vice Chairman at the company. Ekta said that he essentially called what is being proposed as Armageddon for the healthcare industry. Strong words, listen in.
It does talk to a greater need for price transparency and the fact that a lot of people are really unclear on how much the cost of healthcare is going to keep increasing. So there is a real need for it. Now, whether the solution that is being suggested meets what actually will be required, that is another different topic. So likelihood of these things happening is quite unclear. But we don't believe that mandating a common price for the whole country, and that too a price as low as CGHS, where you lose money on doing a lot of procedures, would be the way to provide the best quality healthcare around the country. It can be as low as 20% to as much as 60%. So CGHS rates are applicable to private hospitals for CGHS patients. If you were to make it standard for everyone, then you're asking me to plan on the Armageddon scenario. The middle ground is as per what the rules currently are. Number one, price transparency. Every hospital needs to publish their price list and be clear about how much a thing is going to cost. Number two, being able to take in all the payer classes, and that again, most hospitals are able to comply with. Three, create a standardized list of equipment, procedure, and create these different grades of accreditation that hospitals have so you know which ones are offering you quality healthcare and which ones are not. The rules do exist. They are being enforced, but unevenly.
Okay, all right. Dilip, I wanted your view on this. How do you see this panning out? It appears as a risk, and some of these stocks have taken a knock. Will you look to get in?
Nigel, certainly, I think the way Supreme Court has directed, it really interferes, in my opinion, the way you're allowed to do a business. When you're doing a business, you should be allowed a free hand. But most of the sectors in India, particularly pharma and health and hospitals, are always a very sensitive sector. I think this kind of directives will certainly impact and hit them below the belt. But Nigel, my broader call is that I don't think our government will respond at this particular moment of time, because government also would like to play along with that. In a run-up to the elections, we will hear more such statements either coming from some Supreme Court or from some government in a bid to control the inflation or the cost to the common man. I see this as more from that angle rather than having a very long-term secular impact. I'm sure post-election it could be a different scenario. Something positively will be worked out. So, just to take that a little forward, we have heard today that there's a drug price control on a lot of items on the drugs, especially relating to BP and diabetes. So I think these kind of statements, either as what I said, coming from central government or from court, will continue in a run-up to the election, and one should not see beyond that. At least that's what my view is. Post-election, I think a lot of things will emerge on a clarity basis. But right now, it of course continues to be very nebulous.
Okay, all right. We just stay on. We have a couple of stocks to discuss. Gujarat Gas has surged after announcing an 8% cut in industrial prices to 41.6 rupees per SCM. Sonal is here with more details. Sonal, over to you.
Thank you for that. Well, this was an expected move, and finally it's official that the company has gone ahead. They've cut the industrial gas prices by around 3.5 rupees per SCM. And in terms of percentage, it's an 8% cut, which is quite steep considering the price movements that we've seen in the last couple of years as well. Now, remember, there was already an indication, as I pointed out, that there could be a price cut that would come by in order to increase volumes for the company, because Q3 was weak in terms of volume, especially from the industrial side. In fact, Morbi, or the industrial cluster for their ceramic segment, saw volumes between 4 to 4.2 MMSCMD. This is in January and February. Even in Q3, these volumes remain quite low. Now, ICICI Securities, after Q3 results, had indicated that going forward as well, propane prices, which is a competitor for Gujarat Gas, could be anywhere between 41 to 43 rupees per SCM. And right now, Gujarat Gas's price is equivalent to propane prices, which creates a competitive intensity here. And spot LNG prices, which is a major raw material for Gujarat Gas, that could see a rise in the next couple of quarters. So it was important for Gujarat Gas, in order to save volumes, to cut prices, and that's what exactly they've done. But we'll have to watch out for conversion into higher volumes, because one, the demand from Morbi ceramic cluster has been low in the domestic markets as well as export markets because of Red Sea issues and higher freights. So whether that actually converts into higher volumes will remain to be seen. But yes, sentimentally, it's a positive news that has come by.
Okay, thanks a lot for that. Well, Dilip Bhatt is still with us. Dilip, any thoughts on Gujarat Gas?
So first and foremost, I must say that Gujarat Gas has already moved up from around 420, or maybe it had gone down below even 400 about 3 months back, to what it is right now. So it has had a good run-up on certain expectations. But more important, I think, with this current cut in the prices, it will certainly impact their top line and more so the profitability, without any doubt. But I think I mean, over the last couple of years, the results have been pretty inconsistent, and I think they're not giving any definite trend. So I would say that Gujarat Gas, from the current levels, certainly one should wait and watch. One should not be in a hurry to buy from the current levels.
Okay. We'll take a quick commercial break here, Dilip, but we'll just come back with more. I think we've got the market, which is up a little bit more, 37 points. 21,985 is where we are at. So occasionally you get these bursts of enthusiasm, 20, 30 points worth, and then things cool off again. We've seen this a few times today, but maybe last 45 minutes is a little different. Shibani Sarkar, Korean of Kotak Mahindra AMC, will be with us on the other side. Stay tuned.
Okay, looks like we're going to have a flat day with a bit of a positive bias. So the Nifty is holding up, but with gains of just about 30 odd points. The Bank Nifty is the one that's holding with gains of 260 points, outperforming the index today. But Dilip Bhatt is still with us. Dilip, plenty of stocks in focus, as we head into the next couple of months. You have, of course, there is the earnings season, there is the elections as well. Which are the pockets that you think could still be of interest to investors despite the rally that we've seen?
So I think I would look at it more like this, that, the interest in a run-up to the election and even post that, hopefully that will maintain. I think infra, capital goods and pharma still stands out. I think all the three sectors have a good potential for a good run-up, and there's a long runway for growth for all the three sectors. And I think I would look more from that angle. And maybe I think in something like an AMC's also, they also possibly hold a good promise as we go ahead. So I think these 3-4 sectors are something which I would really love to concentrate on and focus on.
Okay, Dilip, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate it as always here on CNBC-TV18. Shivani Sarkar-Kurian is Senior EVP and Head of Equity Research at Kotak Mahindra Asset Management Company. Shivani, good to have you with us here. Thank you for your time. On a day like today, if you speak with a mutual fund manager, it's not a question. The first question will not be about the market. I hope you understand. It's about the circular. Another circular, actually. It's the email, is the directive from SEBI to AMFI and then AMFI to mutual funds about what they say, right? The line starts by saying, in the context of the euphoria building up in the mid and small cap space, and then it goes on. So I'm sure there is intense discussion going on and how to kind of comply and meet what SEBI wants you to do. Just give us a flavor of the kind of discussions you've been having internally.
Hi, Prashant. Good afternoon. So if you look at, what we have been also noticing and commenting on various forums for a while is that while, from a market perspective, clearly mid and small caps have seen significant improvement on earnings trajectory, and they have also been outperforming large caps in terms of earnings, and that has reflected in terms of the re-rating on the valuation front. In terms of their historic average multiples and current multiples, there is a vast deviation, especially where some of the small cap names are concerned. And we have been citing caution in terms of our commentary, given the kind of valuation re-rating and also with respect to large caps where mid and small cap valuations have been. And that is a reflection of what we have also been stating at our end, especially with respect to some of the measures that we have taken at our fund house in the recent past. We continue to believe that, and of course, this is something that we will keep monitoring over a period of time, and if it's not static, but we continue to believe that while there is ample opportunity in mid and small caps over the medium to long run, in the near term, clearly valuations, especially where some of the small caps are concerned, have moved up considerably, and therefore there is need to exercise some degree of caution. And hence, this is the kind of discussions that we have had internally as well. And some of the steps that we have taken at our end reflects our view. From a fund house, we have been maintaining that if you look at market valuations where large caps are concerned are considerably more favorable. Risk reward at this point in time is in favor of large caps, and therefore tilt of portfolio should move slightly more towards large caps vis-a-vis mid and small caps. And that is something that we continue to maintain.
Okay, all right. Shivani, let's just hold on to that thought. We're having a bit of a 3 p.m. move that's taking place. So I think we should just pull up the intraday chart of the Nifty and the Nifty Bank. Both of them should come up for you on the screen. The Nifty Bank is the one actually that I want. Pull up the Nifty Bank and pull up the 20 DMA. In this last 15 minutes or so, there appears there's an expiry-related move that's taken place. That's a big recovery on the Nifty Bank. From the day's low, I think that index has gained closer around 700 points right away. Look at that beautiful looking screen over there. Now, the Nifty Bank, that's the one that's driving the markets up. So we should pull up the Nifty Bank as well as the 20 DMA. And you'll see that now it's around 150 points higher than that 20 DMA. That chart comes up for you on the screen. That's the one that I'm talking about. It's just crossed the 20 DMA. So it seems some fun and games taking place. You expect volatility to pick up, but looks like the bulls couldn't wait for 3 p.m. Just around 10 minutes before that itself, we're seeing a bit of an uptake. Well, Shibani, noted your view. You all have aligned yourself. I think the fear is that this could be disruptive in nature. If in case the regulator goes ahead and says, you sort out things, puts in a couple of caps, what is your view on it? And that's the reason why the market is a little bit nervous just for the last couple of sessions.
So, Nigel, very difficult to say what the regulator wants beyond a point in time. So going by what has come through in terms of, the circulars, etc., that you were referring to, clearly it is aimed at, ensuring that market participants understand where valuations lie, where mid and small caps are concerned. And that is what, in fact, we have also been, educating and been talking about on various forums as well. That does not, however, mean that mid and small cap as a basket in terms of investments over the medium term is something that should be avoided completely. We do believe that if you look at the earnings trajectory as well as growth opportunity where India is concerned, a lot of sectors which represent growth in India across various segments and buckets are best represented in mid and small caps. So I think we should look at it from that perspective. It is more valuations rather than just mid and small caps. Also, what we have noticed in the past, obviously markets have done well with mid and small caps outperforming. Within the mid and small cap bucket, one is valuations. Also, there have been parts of the segment where there has been some degree of froth that has built up where one should again exercise caution. This could be stocks where overall float has been low and therefore, you've seen very sharp up move, which have not been backed by fundamentals. And if there is a situation where stocks have moved up primarily because of low float available, not backed by fundamentals, that is also the segment where one should exercise caution. But over the medium to long term, clearly, if you believe that growth has to come through from an economy perspective, which we do believe in, there are opportunities in mid and small caps. But in the near term, valuations merit a caution, and that is something that we have been articulating as well.
All right. How are you feeling in general about the market, Shibani? Because now the mid and small caps, as you said, right, there is some amount of caution definitely because the valuations are looking uncomfortable. Would you stay away? Would you be cautious there? And even for large caps, do you think the time has come to sort of move to cash, at least part of your positions, or would you continue to buy the dip?
Sonia, so from a fund house perspective, we have avoided taking any significant cash calls, and that's been our stated philosophy, where cash has typically been in the range of 3 to 5% across our portfolios, and therefore that is something that we continue to maintain. Overall, what we believe is if you look at markets from three perspectives, one, from a macro, India continues to do well. Earnings in the recently concluded earnings season also has held up fairly well. There have been no earnings downgrades, and expectations for FY 25-26 as well as for 24 have remained largely stable. Third aspect is from a flow. Of course, we'll have to monitor how flows pan out. FII flows have been volatile while domestic flows have been holding up. So our belief is that our view on markets continue to remain fairly positive. However, given the run-up that we have seen, specifically mid and small caps, we can't rule out volatility. We'll have to brace ourselves for some degree of near-term volatility. There are many events that will also have an impact on markets. Going into elections, the possible change in terms of interest rate, as well as global events that we will have to watch out for. So our belief is that while we continue to remain fairly positive in the medium term, near-term volatility is something that we will have to contend with, and therefore, we would possibly look at entry opportunities if there is some degree of volatility.
Okay, Shivani, how you're placed on this, private versus public sector theme? Public sector is where the money is, and today my colleague as well, Hormuz, has been covering a lot of the stocks have come off the top. But if I look at the cumulative market capitalization change for today versus yesterday, actually we're 12,000 crores higher. Between today and yesterday. Obviously, the float is limited and the larger cap names are doing better, so they're making up for the ones that are not doing so well. But how you are placed out there? Clearly on select themes, it seems the market has run away itself. Maybe they're talking FY 28, 29 earnings or something like that, because these stocks are pricing in the best. But there are still pockets of value. Your take?
Yes, so absolutely. I think even in this market, there are pockets of value. So firstly, to answer your question in terms of, the public versus private, our take on the entire PSU pack has been that we need to evaluate businesses, sectors on their own merit, and therefore look at sectors where valuations and fundamentals make sense. In that context, we believe that at this point in time, there have been, of course, a significant run-up in most pockets. But in segments like maybe oil and gas, some of the large public sector banks, there is still some amount of value that is still there, given the kind of fundamentals that we see. Second, in terms of pockets where valuations still remain favorable in this current market environment, one large pocket is the banking space, especially some of the large banks, and within that, some of the large private sector banks. There has been a lot of fear that there will be sharp slowdown on loan growth as there is requirement to maybe moderate CD ratio, and that's something that has come through in commentary of few of the banks, which is the credit deposit ratio, and margins have been compressing from the peak. However, today, when you look at valuations of some of these private banks with respect to their own historic average multiples, valuations are lower than historic average levels, while return ratios are better. And therefore, from a valuation perspective, this is one segment where we find valuation comfort. There will be some degree of impact because of margin pressure continuing maybe over the next 1 or 2 quarters. And loan growth is something that we will watch out for. But if you ask me in the market today, where, a segment where there is valuation comfort, I would clearly say that this is one pocket, which we think that from a return ratio and valuation perspective looks fairly well placed.
Okay, Shibani, we'll leave it at that. Thanks a lot for joining in and appreciate your time here on CNBC TV 18. Well, let's move on now. Anant Ambani and Radhika Merchant's pre-wedding event has begun in Jamnagar. Over 1,000 guests will attend the 3-day festivities at the Reliance Greens complex in Jamnagar. Now, the company's pre-wedding festivities commenced with an Anna Seva, where Anant and Radhika actively participated in serving food to the local villagers. This morning saw the arrival of Akash Ambani along with wife Shloka. Bollywood too is making its presence felt in Jamnagar, with Salman Khan and Arjun Kapoor having made their way to the grand venue. Big B Amitabh Bachchan, actress Manushi Chillar and celebrity fashion designer Manish Malhotra are also now in Jamnagar to partake in the festivities, which will feature performances by pop star Rihanna and Punjabi singer Diljit Dosanjh. Attendees from the world of business include Meta's Zuckerberg and Disney's Bob Iger, along with other top business leaders attending the Jamnagar celebration include Alphabet Sundar Pichai, Larry Fink of BlackRock, Shantanu Narayan of Adobe, amongst many others. All right, let's take a quick break. On that note, as always, we'll get you a check on what the dealing rooms are saying in our segment D Street Chatter. We'll also get you some buy today, sell tomorrow calls from our technical experts. Stay tuned.
Welcome back. Well, that expiry-related factor is playing out, but one stock that I was tracking even in the morning was Macrotech Developers, which is Lodha. And pull up the intraday chart out there. You know, in the last 2 days ago, there was a large delivery-based buying that took place. Close to 11 lakh shares were taken home in terms of delivery. And take a look at the intraday chart out there. That green bar, it's a massive one. Big uptick is what we're seeing for majority of the session. It was seeing some kind of pressure from the top, but suddenly that one has taken off and now it's headed to that 52-week high. It was at around 1,220 rupees or thereabouts in January. By the time February came, it had already corrected 15%. Now it seems to be making a bit of an uptake on that one as well. But it's that time of the day where we get Nimish, who will give us a better sense about flows in the markets. Hi Nimish, good afternoon. Tell us more.
Hi Nigel, today the flows will not be that important, largely because there is the expiry which is going to play out, and also there is the MSCI rebalancing. And just to add to your point on Macrotech, Macrotech also is one stock which gets impacted because of the MSCI flows, and also there is a strong buzz that maybe in Macrotech you'll hear a QIP very soon, so that probably explains a bit of consolidation and a move as well in Macrotech off late. But largely, as I said, flows will not be too important in today's market because of the expiry in the MSCI. But I guess some signs of buying seems to be clearly back in the financial names. So as intraday we saw almost 1% up move in the Nifty bank, and that's where some sort of buying seems to be emerging in the private bank stocks. That's overall from a flow perspective. Technically, I'm told 21,850 is the first level to watch on the downside in terms of a crucial support. If that gets taken out, then the level to watch would be 21,450, 21,400 levels on the Nifty. So that's something to watch on in the March series. But just a word of caution on the broader markets. The flows have turned negative in the broader markets of late, but historically there is a bit of pressure in the broader markets in the March series. So that's where some bit of caution seems to be. So the overall feedback is maybe the March series will be the series for the large cap names. So that's something to track going forward. But I guess today the flow, as I said, would not be much important because of the expiry as well as the MSCI rebalancing.
What about individual stocks, Nimesh? What are you looking at?
So in terms of individual names, the first name is Lumax Auto. That stock is buzzing after a very large block, nearly 4% equity got changed hands. So looks to me it's not a clean out trade from the seller, but from a buyer point of view, a single domestic mutual fund was a buyer in today's block. So disclosures there would be quite interesting as to who's bought in Lumax Auto today. The second name is Nestle. That's been buzzing in trade today, and I guess that will react only because of the MSCI flows, as well as there is an MOC buying as well in the last 30 minutes. So maybe you'll see a bit of uptick reaction in Nestle. So expect higher delivery volumes in that stock today. The third name is JSPL. Within the metal names, this is one stock which is well bid by large institutions. So again, JSPL is buzzing on strong buy flows. So expect even there good delivery-based volumes. And the last one is Utkarsh Small Finance Bank. Been consolidating in a very narrow range. Of late, some HNIs have bought as well. But now I understand there's going to be a very large block deal in Utkarsh Small Finance very soon. So that's something to track going forward in Utkarsh.
All right, thanks a lot for that. Well, Mitesh Thakkar is joining in now to tell you what to buy or sell today for a reverse trade tomorrow. Mitesh, over to you.
So I have persisted on the buying side. I think that's a stock which is reversing very well from support levels. So BDST here, keep a stop at 85.50 and look for a target of around 86.70, 86.75 for tomorrow. And as I said, I think the bank Nifty has, kind of reversed from 46,300 levels. So that's resistance is coming into play. So Kotak Bank is an STBT. We'll take a negative stance there and keep a stop at about 1696. Look for targets of 1670.
All right, thanks a lot for that. Well, I'm also watching out for the auto sales that come out tomorrow. Now, this is for the month of February. Couple of things to watch out for. It's going to be a mixed bag this time around, largely because some pockets have done well and some not so well. The ones which have done decently well are the passenger vehicle and the two-wheeler space. So there is a healthy traction that we've seen in that space. But it's the commercial vehicle and the tractor space which has been under a bit of pressure in the month of February. So the passenger vehicle wholesales are expected to go up by about 10% year on year, while the medium and heavy commercial vehicle space is expected to go down by about 9% on a year on year basis. Two-wheeler industry sales will be good, about a 30% growth year on year, while for tractors, we are expecting a decline of around 13% year on year. Similarly, for individual stocks as well, Nomura's estimates will come up for you on your screen. For Ashok Leyland, it has been on the weaker side for a couple of months now, and Ashok Leyland expected to see a fall of 9%. Bajaj and Hero could be good, about 12 to 25% growth there. TVS Motor could be the best of the lot with almost a 30% growth is what we're staring at this time. Maruti Suzuki double-digit growth over there. M&M as well 16% growth. And then you have the tractor numbers for M&M, which could be under pressure as you can see on your screen. Amrish Balika is joining in now to speak to us. Amrish, good chatting with you after a while. In the auto space, anything that still catches your eye and something that you like for the longer term?
In the auto space?
Yes.
In the auto space, I would still look at TVS, where, like you rightly said, we could see, extremely good sales. So that's one stock I would look at. And again, also Hero. But again, Hero, I would wait for a correction to buy because anyway, it's, we had an extremely good move in that. So I'll possibly wait for a correction of about 5 to 8%. Again, something like a Maruti, I would, again, wait for a correction of about 10% before buying Maruti. So these are, a couple of stocks where, I've kept a tab on, but TVS is something which I'll buy right now.
Okay, all right. Hi, Amrish. Good afternoon and good to see you. When you normally give us that one pick that you're tracking, I believe this time around, I think it's Varun Beverages. Tell us more about that. A couple of sessions ago, I did see a lot of selling, but I think that's the one you're tracking, right?
Exactly. And we'll have a summer starting off soon, so you'll see the demand going up. But then it's one of the largest franchisees of PepsiCo globally, in fact, outside US, with products across 27 states and 7 union territories. The carbonated soft drinks category dominates their sales. It constitutes about 68%. Juice category is about 5%, and water represents about 27% by volume. And typically, if you look at energy drinks, they normally constitute about 14 to 15% of the total beverage market, but in India, it's still very low. Sting, which is a product of PepsiCo, which they have launched, it has successfully captured a good market share right now with a distribution network of about 3.5 million outlets. And they also recently acquired the beverage company South Africa, which is again a franchisee of PepsiCo in that region. And this is a positive development. If you look at the Q4 numbers, because they follow the calendar year, Q4 CY23, it's a very strong performance. They've had a robust 20.5% Y-on-Y growth. If you look at the EBITDA, it moved up about 36%. EBITDA margins, in fact, moved up about 180 basis points. And the PAT was about 76% up. So I'm expecting the revenue growth of about 24% CAGR over the next 2 years, and expecting an EPS of about 25 for calendar year 25 with a target price of about 16.25.
Okay, all right. Well, we have some flashes, on the screen with the cabinet meet outcome. They've approved a proposal for new solar subsidy scheme. One of the stocks that's incidentally popped up is Borosil Renewables. You should pull up the intraday chart out there. I think the stock was more or less flattish. But after we started getting those, comments with regard to the rooftop solar scheme for 1 crore households, that stock has moved up a little bit. Amrish, any view on Borosil Renewables?
No, surely this company will benefit because of the scheme which has been launched by the government, and clearly it's a long-term buy. And we've seen a decent correction after a good move. So at the current levels, it will be bought.
All right, current level, these stocks should be bought. Got it. Let's also talk about Reliance Industries, which has been the big, newsmaker of the day in the last 48 hours. Actually, Reliance has clinched a mega deal in the entertainment space, entering into that 70,000 crore rupee JV with Disney that combines the media business of Viacom18 and Star India. Nisha is here with all the details.
It's a big deal. Largest media and entertainment company is in the making, with giants Reliance Industries and Walt Disney striking a deal to form a strategic joint venture to create an $8.5 billion media behemoth. Reliance, with Viacom18, will own the controlling stake in the JV, with Disney owning around 36%. Now, Reliance Industries will also pump in a whopping $1.4 billion into the joint venture company, which is getting created. Now, leadership to include Neeta Ambani as the chairperson and Uday Shankar, the erstwhile head of Star India, remember, is going to be the vice chairperson of this company. Now, transaction transaction is expected to be completed by end of 2024 or early 25. Deal structure. That includes Viacom18 to be merged into Star India, and Viacom, remember, is a subsidiary of the Network 18, a listed media company of Reliance Industries. Earlier, the company had announced a consolidation of TV18 with Network 18. Now, on a fully diluted basis, the Viacom18 shareholding looks like this. Reliance Industries owns 57.7% stake, TV18 at 13.5% stake, while Paramount and Bodhi Tree have minority stake. Remember, Bodhi Tree is owned by James Murdoch and Uday Shankar. Now, it's a combined power to form the largest media company with a combined revenue of 25,000 crores. With over 100 channels, streaming platforms with impressive international catalog, and the largest sports offering from domestic to international sporting event rights. Now, this also means around 40% market share in TV and streaming, which Competition Commission of India is likely to scrutinize. So, the regulator's approval will be crucial for this transaction. It will also put the heat on the competing media companies. And in the listed space, we have Zee Entertainment and Sun TV. Now, the combined company with the revenues of 25,000 crore rupees will be bigger than any other media player in the country by a huge margin. And also remember, the largest company takes a bulk of the revenues as well as the profit pool in the media and entertainment space. Remember, capturing and controlling the advertisement share. Even in telecom, not just in media, the competition is intense for content play, and content play of Jio's bundled services will intensify this competition for other telecom major to be watched out for. Now, as far as the brokerage views are concerned, Jeffrey says that the transaction adds 40 rupees per share to Reliance Industries, sum of the parts from media. Morgan Stanley adds 2 to 3% to RIL's base case NAV. Now, to end with Mukesh Ambani's quote on the announcement of this big deal, he calls it a new era in the Indian entertainment industry.
Indeed, thanks for that, Nisha. Well, by the way, stocks have really taken off in the last few minutes. As we went through that presentation from Nisha, Nifty is at the high point of the day. The Nifty Bank is firing away, but individual stocks pull up. Union Bank, that stock is moved up. Now it was actually trading in the red just around half an hour or so ago. Union Bank should come up for you on the screen. Tata Elxsi, that's moved and it's moving very, very well. Berger Paints as well. Berger Paints is now up close to around 8% as we speak. And Indus Stars as well. So quite a few stocks in there. They are moving very, very well. And a lot of these stocks, maybe there could be an element of expiry as well that's playing out. On the flip side, actually, Whirlpool has slipped. The stock was a bit resilient in the last few sessions, but Whirlpool has moved to the low point of the day. We'll have to take that break. You come back and we'll wind down the series. It's been a good one for the Bulls. They'll want to press home the advantage in the last 10 minutes or so. Welcome back. Well, keep an eye out on Berger. You know, the stock that we are talking about, I think if you pull up a futures plate of Berger Paints, it's trading at a sharp discount in comparison to the current cash market rate. So currently the stock is more than 600 rupees. When the futures rate, I think there's a big discount there. Now that stock is up closer to 9.2% as we speak. So that is one of the big movers. Delta is the other stock that's moved to the low point of the day. I think this is playing out its last expiry. So that explains why that stock as well has moved lower as we speak. Amrish, wanted your view on Berger Paints. You know, we had the management of Indigo Paints, and I asked him, I said, sir, you know, there's going to be big competition because Grasim has come in. He said, I've seen this before. You know, I don't want to comment on my competition, but he believed that this is par for the course and the industry is large enough and you keep doing your thing. That was the comment that we got from Indigo Paints. What's your view on the paint sector with a big player coming and a formidable player coming at that?
See, I mean, the management will always give a positive view, especially when you have a huge competition like this coming in. But then the fact is that Birlas would be throwing money to get market share. So the marketing spend is going to be huge. And I mean, looking at their size, I mean, what they're talking of over the next 3 years is surely going to affect Indigo and Berger and AkzoNobel to a certain extent. Because all of them are there into the interior and exterior paints. I mean, I don't see too much of a issue for Kansai and Nerolac because they are industrial paints mainly. So, I mean, that effect will not be there. But if you're talking of these three mid-sized players, they'll have, I think, a decently huge effect. At the same time, Asian Paints, which is about 3.3 times most of these, and also compared to what Birlas are talking of the revenue in the next 3 years, they are currently 3.3 times that. But still, I mean, despite being a leader, there'll be some effect as far as Asian Paints is concerned. But then we've already seen Asian Paints underperforming. So I don't see Asian Paints going down much from here. But something like a Berger, I think this upside can be utilized by investors to book out because I'm quite sure you get it at a lower price.
Okay, all right, and that's the play, you know, Sona, that we're talking about. Discount of 60 rupees in comparison to the cash market price, you know, so that's the one that we're talking about. Could be an element of F&O as well that's playing out there.
Oh, absolutely. Very important to that move in the stock. But we have a couple of minutes to go before we wind up for the day. Amrish, any other stocks? You were talking about Varun Beverages, right? Anything else that you like from a medium to longer term perspective in this market?
In fact, I mean, I like most of the specialty chemical companies because if you look at the earnings, I mean, we have seen some sort of an uptick as far as margins are concerned. We're just waiting for the volumes to increase, and I think that could happen over the next 2 or 3 quarters because I think the China Plus One should actually play out extremely well. So in that space, clearly my buys at this point of time would be SRF, Deepak Nitrite, Vinati Organics. I mean, these 2 or 3 stocks, I think, should perform extremely well if you're talking of the next possibly a year or so. So, and at the same time, we have also seen a decent correction in these stocks. So, the valuation-wise, I think it's quite attractive.
You know, what about these two-wheelers? Amrish, we have Bajaj Auto. That's because it's gone ex-buyback today. We had pointed this out earlier in the morning itself. Last hour of trade yesterday, there was some buying for those that wanted to be eligible because from a retail perspective, they could be eligible to 15% of their shares getting taken into that buyback. For institutions, I think it'll be less than 2%. So that stock is down close to 3.5%, but it's been a big outperform in the last 12 months. What's your view at around this 8,000 rupee mark? Bulk of the good news is factored in, or would you still be a buyer?
I think that trigger is already over. I mean, those who had to invest have already done that for the buyback. So I think one has to wait for Bajaj Auto to cool down a bit because, I mean, we have seen an extremely good move because of this trigger. At the same time, like I said, Hero, I would possibly wait for another 8 to 10% sort of a correction. But TVS is one, despite the move which you've already seen, I think there is a decent upside from here because the sort of numbers which they'll continue to announce month on month, I think should surprise the markets. So something like a TVS, I'm still looking at a price of about 2,400 to 2,500.
All right, we'll leave it at that. Thanks a lot, Amrish, for joining in. Let's just wind down the day's trading action. As we said, the Nifty ends with minor gains today. The Bank Nifty is the one that actually will go home with about 330 points in terms of gains. The FMCG stocks have gained a bit of ground today as well. So Tata Consumer, Britannia, Nestle will all end in the green. The The Adani Group stocks saw some gains today. So Adani Enterprise, Adani Ports up almost 2 to 2.5%. But on the downside, auto stocks, Bajaj Auto, Eicher Motors are under pressure, while hospital stocks are under pressure as well. So Apollo Hospitals was the one that was down almost about 5%. But largely it was a good day of trade. I mean, by the end, the Nifty goes home with 100-point gain. So recovering a bit of what it lost, in the last couple of days. And the mid-cap index also up about 350 odd points. So the surge actually came in late trade. It was, flying away to the finish.
Well, indeed, Sonia, it was could be an expiry-related factor as well that played out. The bears were feeling very, very confident in the morning, and they've got stuck on the wrong side. So the bears, in fact, they actually got taken to the cleaners by the end of it. And for the series, actually, things looked very, very good. For the Nifty, it was up close to around 700 points. So that's the kind of rally that we've seen on the Nifty. 700 points in a single series. At the start of the series, people were fearful that, well, this market is net short. But we did see that, there was a big recovery out there, and that index did well. On the Nifty Bank, it was up close to around 1,400 points for the series itself. So massive, massive moves is what we have seen on this. And that, the historical evidence continues to hold. If the FI is a net short, you go to buy the Nifty and you'll make some money. It played out, I think, in November. It played out in April as well. And it plays out in February. So good up move is what we're seeing. A few stocks though did very, very well from the broader market. Just pull up some of these names. Infibeam was up close to around 10% in trade today. HCC as well did come back in style. So a big up move is what we saw on HCC in today's trading session. Volumes as well were extremely high on that stock. And you had Hindustan Copper, that was another stock that did come back in trade. NMDC, add to the list. So I'm talking about the top volume movers in trade today. On the flip side, actually, RVNL was a stock that did lose out. So that stock was down by close to around 6.5% in today's trading session. Amrish is still with us. Amrish, let's try to squeeze in a last couple of questions before we let you go. Any view on some of these smaller names that moved today? Infibeam, HCC, Suzlon. They were under pressure in the morning, but they came back in style. And that's, some of these stocks, they had gone down to pennies and then they have recovered big time.
Infibeam, I'm really still not sure of their business model, so I wouldn't recommend Infibeam at any price. When it comes to HCC and Suzlon, I think both of them have actually, come up from the ashes. And if you look at the order flows for both of them, we keep hearing of order flows, every other week or every other fortnight. So Suzlon also has corrected well from those levels which we had seen recently, 50 plus levels. So at the current levels, I think one could look at buying it with a target price of about 60. Even HCC, it has stabilized at these levels decently well. Should move to levels of about 58-60 over the next 6 to 8 months.
Okay, thanks a lot, Amrish, for joining in and giving us your view on a whole host of stocks. We appreciate you joining in and giving us a couple of stock ideas as well. Well, curtains down then on the markets. Almost a century on the Nifty. Who would have thought? You were fearing today when the markets opened up with a cut. The Nifty Bank, it recovers big time. It conquers the 20-day MA on a closing basis. And the mid-cap index as well. By the end of it, more number of stocks advancing in comparison to the number of stocks